Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. In today's video we are looking at 5 different companies that are either fairly valued at the moment or discounted right now, or undervalued if you like. And each one of these companies are high growth companies, so they grow in their earnings about double digits. That's the reason that we're looking at. And of course they are either fairly valued like I said or discounted right now. Before we do that, please give the videos a like, because it really makes huge difference to us, as well as of course joining us on the Patreon account, where you get access to the Sharia compliant investing ebook. You've got all the dividend trackers, you've also got all the buys and sells, and you have access to the Discord where you can meet like-minded brothers and sisters who are actually sharing good practice. Okay, right, we're gonna get straight into the video because I don't want to make this video any longer than it needs to be. So we're looking at these criteria here. So we're looking at the company name, the market cap, the economic moat if you like, the price, current price. We're looking at earnings per share, we're looking at PE right now, and we're looking at the forward PE as well as the PEG ratio. Price to sales, we're looking at profit margins, return on equity, we're looking at current ratio and see if it's above 1. That helps us to know if these companies have enough liquid assets that they can actually use in the next 12 months, especially with high growth companies, because that's what they do, is to grow their company. Of course, it's to be able to, they basically need to have enough liquid cash, otherwise they might have to go to the bank and borrow more money, and with the current interest rates you don't want that. We also want to make sure the company has a free cash flow. We want to see what the total returns are for the last 10 years in these companies. We're looking at the growth estimate for next year and growth estimates for the next year per annum, and then Morningstar valuation, and then their fair value price. Okay, right, the first company we're looking at is Fortinet. This company is in the cybersecurity side of things. They do a lot of the cybersecurity as well as networking solutions. Currently they are actually, a year to date they are up about 7.5%, but for the last 6 months they're down about 24%, over 24%. So that's why I thought, you know what, let's have a look at this company, because we haven't looked at it for in maybe a couple of months now. So it looks like it's down quite a bit. For the 1 month is up about closer to 4%, and the last 5 days is just almost a flat. A year to date is about just 1% down. So as you can see here, the lowest it's been so far is for this year in the last 52 weeks range is $42, and the highest it's been is $81. And I do remember it wasn't that not long ago when it was trading about in the 80s. Okay, now going back here, as you can see, it has a market cap of $40 billion. It has a wide economic moat. Current price is $52. EPS is $1.45. So that means this company is actually a profitable business. Current PE is 35. The forward PE is 30. PEG ratio of 1.177. Now PEG ratio, we want it to be below 1, but in between 1 and 2, that's also okay. Price to sales, we're also looking the same, but this one is 8. Profit margin of 22%. Return on equity 843%. Current ratio is above 1. Free cash flow of almost $2 billion. Total return in the last 10 years, if you had this company in your portfolio, the total return would have been 31%. Growth estimate for next year, that's per annum by the way, growth estimate is for the next year is 8%, and then 16% every single year for the following 5 years. That again, this is estimation, so also always make sure that you take it for what it is basically. Okay, Morningstar is saying is fairly valued at the moment. It's $60 per share is where they think the price should be. Right now is about $8 below where that is. The next company that we're looking at is a company called Salesforce. This company has been in my portfolio for a while, then I sold out, and then it just went to the moon. And CRM is doing all sorts of things, from cloud side of things, from working with a lot of companies, dealing with all the HR side of things, dealing with the AI, everything you can think of. This basically, like I've always said to you guys, this company will become the Microsoft of the future. But Microsoft actually kind of reinvented itself, but sooner or later this company will take over from Microsoft, maybe in the next 10 to 15 years. I don't know, but I'm just speculating, right? So 1 year is up 93%. I think as soon as I sold it, this company and Adobe, as soon as I sold them, they went to the moon. and year to date is actually up 86% since the beginning of this year. So January up until now, 3rd of January up until now is actually gone up 86%. In the last 6 months is up about 20%, and currently it has 243 billion market cap, wide economic mode, $250 per share right now, EPS $2.63, PE right now 95. The forward PE though is interesting, is 26, which is probably this lowest is being predicted, and then PEG ratio of 1.32, price to sales 7.2, profit margin was just above 7%, return on equity 4%, current ratio just below 1, and free cash flow of $8.8 billion, which is quite nice for this company, and total return in the last 10 years 17%. They're expecting the earnings to grow about 17% next year and 27% the following year. Fairly valued right now, $267 per share is where they think the price it should be. That's about basically $15 from where we are right now. Again, solid business. So in terms of expectations, if we go down here, you can see that basically the annual revenue is actually growing absolutely amazingly. So from 31.3 billion to 34.8 to 38.55. Now EPS, when you click the annualized and remove the estimates, you can see it has been growing. So last 2022 it was down a bit, then it bounced back. Now if we included the estimates, you can see from where we are to where we will be next year, about $8, and then from $9.50, which is absolutely amazing. Now if we go on here and show you the earnings, for example, for this company, from 56% in 2024 to 16%, 18%, so double digits in the next 3 years. Now this is 46 different analysts are looking at, 49 analysts are looking at, 29 analysts are looking at. Now let's go back to this one, because I want to do exactly the same thing for Fortinet as well. If we go down here, you can see 30%, almost 31%, then 8%, then 17%, and then so on. Okay, same goes for the revenue, 20%, 13%, 16%, 23%. So that's absolutely huge growth in terms of where the companies are heading. Right, so the next company that we're looking at is Applied Materials. You might be thinking, why is this company on this list? They're not really high growth company. There's farms in the semiconductor company. This company is up 36% since for the 1 year. A year to date 52%, almost to 53%. In the last 6 months about 8%. And when we look at the earnings, I'll come back to that in fact, let's just have a quick look in terms of earnings estimates. Okay, so they expecting a decline in 2024, and then after that it's about 16%, and then 15%, and then 17%. So that's one of the reasons I wanted to include this. 9% in terms of revenue, almost 10%, and then 8%, and then another 8%, and then so on. So that's one of the reasons I wanted to include this. 124 billion market cap. It has a wide economic mode. Current price $147 per share. EPS of $8. PE right now is 18. The forward PE is 18. The PEG ratio just below 2, and price to sales of 4.7. So far it's the cheapest based on price to sales. Profit margin, we're looking at about 26%, return on equity 48%, current ratio way above 2, and then 6%, almost $7.6 billion of free cash flow right now. Total return in the last 10 years 25%, and they're expecting the earnings to grow according to Yahoo Finance. Analysts 16% growth this year coming, and then next year, basically next 5 years 13%. So that double digit growth is the reason why I've included here. And the fairly value right now $152 per share is where the price should be. Now the next company that we're looking at today is Booking.com or Booking Holdings. This is one of the companies that I've looked at so many times, but let's have a quick look at in terms of 1 year, almost to 62%, 63% in terms of return for the last 1 year. A year to date 61%, last 6 months 23%. So it has actually gone up quite a bit since there for the 1 year. Now if we look at the estimates moving forward, this is one of the reasons I've included this company. So 2023, almost 50% growth, almost 18%, 19%, 12%, so all double digits until the 2028. Okay, in terms of EPS, in terms of revenue, 24%, that 11%, 10%, 7%, and so on. Now looking at the market cap, $114 billion. It has a narrow economic mode, $3,275 per share right now, $143 of EPS right now, and PE right now is only 22, and forward PE of 19. Price to sales below 1. Sorry, PEG ratio below 1, and price to sales of just below 6. So this tells me this company, it is undervalued at the moment because of this PEG ratio. Because remember, we use PEG ratio for a high growth companies. Currently profit margin is about 26%, return on equity of 348%. And current ratio is above 1, $7.8 billion of free cash flow right now, 11% total return in the last 10 years, and 19%. Basically, they're expecting the earnings to grow about 19%, then 27% every single year for the following 5 years, which is absolutely huge and fairly valued right now. $3,450 is where they think the price should be. Right, the next company we're going to look at, in fact, I just want to show you one more thing. I want to check one more thing in terms of, you can see that growth again if you want to see the graph side of things, and you can also see the growth that it expects. This is probably why they have this company is in that, it doesn't even have a higher multiples, to be honest with you, from right now to about 22, so it's not really huge. Right, next one is Autodesk. We talked about this company a while ago. Almost a 48 billion market cap. It has a wide economic moat. Right now the price is $224 per share. EPS of $4.24. PE right now 52. Forward PE of 28, and PEG ratio of 1.41. Price to sales right now 9, profit margin 17%, return on equity 78%. Current ratio, we're looking at just below 1, and free cash flow of $1.7 billion, and it had basically total return of basically 17% in the last 10 years. Growth estimate for the next year is 9%, then 12% after that for the following 5 years. It's discounted right now by about 9%. $247 per share is where the price should be. And looking at this now, 1 year is about 14% up, a year to date about 21%, and the about 6 month is about almost 12%. Now if we go to earnings and click these earnings estimates, you can see about 13% in 2024, 9%, 13%, 26%, almost all of them double digits if you think about that way. And if you think that way, and then year to basically in terms of growth side of it, in terms of the revenue, we're looking at about 9%, 10% almost, and then 11%, and then so on. So again, another solid business that seems basically right now undervalued according to Morningstar. And there you have it. That's the 5 different companies I wanted to share with you guys. They're all solid. They all have basically positive EPS. They're expecting to grow a lot. They're fairly valued or really discounted. So imagine in the next few weeks and months, if we see a dip in the markets, okay, these companies will become really very attractive. Right now, the basically Booking.com is the one that I'm basically thinking, you know what, it's for the long term. This is kind of buy and hold company. They don't just own Booking.com only. They have loads of different websites and so on. So it will be interesting to look into that business. Now, in terms of Sharia compliance side of it, okay, absolutely no issues. Let me just zoom in for a bit so you can see. You can just pause the videos. One thing I like about these companies is, especially high growth companies, in terms of interest bearing debt and interest bearing securities, there's not much of that going on. So as you can see here, you can pause the video and have a look at it. Right, that's the 5 companies I wanted to share with you guys today. I don't own any of these companies in this portfolio right now. What I'm doing is, next couple of days, inshallah, I will be releasing a video where I'm going to go over every single stock I have and value them and tell you exactly what I'm going to do coming 2024, inshallah. So some of the companies here, I will be selling them. I'll let you know which ones they are, and I will let you know. So I want to rebalance kind of the portfolio and put fresh new money into possibly new companies, because a lot of the companies in here that basically I just needed to check every single company and see where I am at right now, and if I still believe in the business or if I want to get rid of. And there were two companies that came up that I thought, you know what, maybe it's time to let them go. So I'll share that with you inshallah very soon. Have a wonderful day. By the way, if you haven't joined the Discord, please do so. It really helps the channel, as well as of course liking the videos. It takes a lot of time and effort to put these videos together. I would appreciate, even if you don't do anything else, just like the video, subscribe to the channel. Let me know if you have any questions. Have a wonderful day. Assalamu Alaikum.